Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. For now, the market is headed at the lowest point of the trading session. We are below the mark of 24,200. Bulk of the gains that we saw yesterday are getting undone today, even if the global cues are still very supportive. If you look at the US markets and the futures rate coming in from there, it's still showing signs of positiveness there. Third day running, it's expected that the US market will be in the green. Dow futures suggesting an uptick of around 77 points. But back home, it is the Indian markets which are coming under pressure. What's leading to the pressure then? Let's try and dissect which are the top losers. Hindalco, of course, is the one that's taking a major cut today. Novelis numbers weren't as strong. Actually, the Q2 numbers were okay. It's the outlook which is not very strong. They're not very confident about the guidance as well. That's the reason that stock is coming under pressure. Trent, which is an earnings reaction coming through, the street did not like the fact that the top line was weaker than expected. Margins are in line, the profitability is also in line, but the top line misses something that is not being liked by the street. The management commentary does suggest that the muted consumer demand environment really continues at this point of time. So that stock has seen a major cut at the moment, 8% lower for Trent at the moment. We're also seeing cuts on Shriram Finance, Grasim as well as Tech Mahindra. These are some of the stocks which are in the red. What's in the green then? Apollo Hospitals. That one has been doing well since the start of the trading session, getting a thumbs up with that occupancy level going up and the fact that RPOB has also managed to go up. The management commentary regarding the way forward was also quite strong. That is in focus. SBI ahead of its numbers is doing quite okay. The numbers are expected tomorrow if I have it right. That stock is up 0.6%. Close to the highest point of the trading session. HDFC Life, TCS, Wipro, some of your other top greeners from the frontline index. From the broader markets then, KC International is up 7%. J&K Bank is doing well. Policy Bazaar is up 4%. Nykaa has also managed to see some bit of uptick in the last few minutes. Can't say the same about Glenmark Pharma though. 7% cut. Blue Star is under pressure, 5% cut. And then some of the pharma names, Ajanta Pharma, Alembic Pharma, Glenmark, as I pointed out, Metropolis, these are the stocks which are in the red right now. But M&M, that one also came out with numbers, looked fairly okay on the absolute numbers that came through. The profitability was a beat. The revenue looked okay. The market share expansion is something that was positive, but the stock is a bit volatile in the trading session. The management did allude to the fact that for the tractor business, they're raising the guidance to 6 to 6.8% versus 5% earlier. But something is clearly worrying the M&M stock right now. In fact, let's take it across and hear out what the management had to say in the press conference earlier.
Expect what we're seeing on the ground right now. I listed out multiple factors, one of which was improving arrivals in Mandi. We expect to see all of that lead to a 13 to 15% growth in the second half.
And Anurag, on Club Mahindra, we do see a continued level of buoyancy around travel. Occupancy rates for this quarter, which really did not include much in terms of holidays, was still at 77%, which is very strong. Same as what we'd seen last year. And not increasing that number because the second half of the year we did have a much higher base. So, we had already started seeing all the benefits of the volumes that had happened. So we stay with the mid to high teens for the year, which means for the year and hopefully in the second half as well, we will be ahead of the industry. So we do intend to continue to grow at that pace. Your second question was on our inventory, and I'm assuming you mean dealer inventories. We had a very good festival offtake, and our inventories now are way below 30 days at the dealers. Our offtakes were much higher than the billing that we did, and we did mention we have a few extra days of stock. That's all gone, and we are way below 30 days.
Well, my next guest on the show is someone who actually coined the word emerging markets when the world was only grappling with the whole idea of emerging markets. He actually said, okay, emerging markets are where you actually can invest because they offer growth and they are unknown in terms of an asset allocation. And that very gentleman is joining us live on ET Now, and you can see him by now. Mark Mobius. Mark, is it true that you coined the word emerging markets, and with Franklin, you were perhaps the first fund manager who decided to invest outside the comfort zone of US and Europe?
Yes, actually the first emerging markets fund listed in New York was the fund that I managed that was called the Templeton Emerging Markets Fund. John Templeton asked me to manage that fund, and that was the very first emerging markets fund. Actually, the term emerging markets came from the IFC. the International Finance Corporation, they came up with the idea because before that, everybody was calling it very depressing names like the poor, the third world, the underdeveloped. And so Antoine van Akmel, one day in the shower, thought of this optimistic name, emerging markets. So that's the name that stuck. But I guess I was the one who popularized it.
Great, so nice to hear that. I just wanted to bring this point out for our viewers that Mark was the first official head of an emerging market fund. And when did you start investing in India, Mark? What was that first investment and in which year?
We started investing in India in the early 90s, 1992, 93.
Wow, so you've invested in India for about 36 years and you've been tracking emerging markets for 40 years. So that
Exactly.
that brings me to my next question. Having studied the importance of emerging markets and how they move in correlation with the US presidential election, what do you make of Donald Trump's victory? And I'll expand this question slightly, Mark, just for the benefit of our viewers, which is that 2016, when Donald Trump came to power first, the markets were nervous. Markets went into a tailspin. But now he's come back and he's been voted back to power. Markets are celebrating. Why two reactions are why the market reaction is separate and different for the same person?
It's a very good, you mentioned the two periods for Trump because you must remember his first term, he was hit with the COVID problem. And that depressed markets, had nothing to do with him. That was something because of COVID. Now we're in a situation where he's coming in to revive the US economy. And it's going to be very, very good, not only for the US, but for the world. Because let's remember, the US is the largest economy in the world. And if the US does well, everybody else is brought along. People benefit because more imports, more exports. A lot of people talk about the tariffs and so forth. Sure, there will be tariffs, but at the end of the day, the total volume of business will go up. People will adjust to these tariffs. And Trump is going to institute many, many reforms, particularly deregulation. One of the biggest problems facing not only US business, but businesses around the world is government regulation, over-regulation by governments, where governments tie down new enterprises to start again and be enterprising. So that's a real problem, and hopefully Trump will be able to overcome that. In fact, he's stated that the big problem is not higher taxes, but the big problem is regulation, government regulation. So I think that's going to revive the US economy in a big way. Of course, the stock market has not been doing that badly in the US in any case, but I think it will do even better going forward. And that will happen also in other parts of the world.
Mark, there are two factors at play. Donald Trump will revive the US economy. That's his elected promise, and that is what he, in a sense, is aiming at. But at the same time, he would also impose a lot of tariff. And tariffs means global growth will slow down. So can America grow at a cost of world slowing down?
I don't think tariffs will mean a slowdown of growth for the simple reason that you're talking about 10% at most for most countries, and people adjust to that very, very quickly. Companies adjust their prices accordingly. People are able to absorb slight increase in prices. And in fact, many prices are going to go down as companies adjust to the deregulation, which will be even more critical than the tariffs. So I believe the tariffs are not going to hinder growth. In fact, you're going to see better growth going forward in the US and the rest of the world, and particularly India. India is doing very well, as you know.
Mark, it's also believed that the China comeback when China was ready for a comeback, Trump has also made a comeback, which automatically will have medium-term and long-term implications on the Chinese export economy. So this entire talk of China coming back with stimulus package, could that really fade away with Donald Trump coming back?
Well, China has many tools at its disposal. Unlike a lot of countries where you have to go through a long, drawn-out legislation and debate and so forth, China can say, look, Trump is going to impose a 10% tariff. We will devalue the renminbi by 10%, making the Chinese goods very competitive globally. Of course, other countries might be hurt by that, and they may have to devalue in line with the Chinese devaluation. But the Chinese will find ways to get around these problems. Already, they've been building plants in other parts of the world, which, by the way, is a good benefit to other countries, particularly in Southeast Asia. And as you know, Chinese companies are moving to India to produce because this is one way to get around the US tariffs. So I don't think China is going to be hurt very significantly because they will be able to adjust to what the Trump administration is doing. Now, a lot of people say, well, what's the use of having these higher tariffs in the US if the Chinese can adjust to them? The use is, of course, and as Trump has mentioned, it brings in a lot of money into the US Treasury. So you begin to tackle the big US deficit with a higher tariff, but it won't mean inflation because prices will not necessarily go up. They may even go down with the devaluation of the Chinese renminbi and other currencies.
So next 3 years, Mark, which end of the financial market do you think will go lower? And which end of the market do you think will go higher? Because a lot will change. It's like a big shakeout which will happen. And when a shakeout it happens, it really stirs a lot of things.
Well, equities will do much better, first of all. That's my view. If you look at fixed income, of course, if interest rates go down, then you have a situation where fixed income prices start adjusting all over the place. So you're going to probably have a lot of volatility on the fixed income side, but equities, I think, will do much better.
Mark, at what level do you think the vigilantes of the bond market would come out and say that, okay, you got to stop printing? Because the idea here is to pump prime the US economy, keep corporate tax lower, and keep tariffs high, and keep on cutting interest rate. That seems to be the master plan, where rates should be low, tariffs should be high, taxes should be low, and that means money printing will continue. So at what point in time the vigilantes of the bond market will come and say, stop it?
Well, if you look at the money printing side of things, first of all, by the way, which is directly related, of course, to inflation, the more money that's printed, the more devaluation of the currency takes place, and the more inflation you have. And if you look at the growth of money supply in the US, it's actually been flat. There's been no growth. In fact, money supply has been going down, not up. So that's one of the reasons why you're seeing inflation in the US beginning to decline. As this continues, and if it is continuing under Trump, then you'll see inflation coming down, as long as they don't and increase the money supply and have that grow at a faster pace. As I say, currently it's flat. There's no real growth of money supply in the US.
Mark, so let's put in India in the equation. If manufacturing moves from China, is that good for India? Do you think something could go against the Indian IT sector, which in a sense has been the backbone for the Indian economy? Because these are two moving parts. What comes from China to India and what goes from India to other countries?
Well, first of all, there's no clear path to a high-tech revolution. You've got to take all the steps. You've got to move software companies into India, which already has happened and which is continuing to happen. But you also got to get the hardware into India, and that's beginning to happen. As you know, there've been some massive semiconductor investments taking place in India today. So it doesn't mean that manufacturing will stop or decline in China. What will happen is the high labor input manufacturing in China will move to India and to other parts of the world because labor rates in China are going up, not down, and also the population is aging. So the combination of these factors will be very, very beneficial for India going forward. And I believe India will become a major force in high-tech technology, innovation, and manufacturing. So we're in a very, very sweet spot when we're in India, when we look at all of these factors.
Mark, when we spoke to you last, after that, benchmark indices are down 5%. Mid and small caps are down by 15 to 25%. Have you increased your India exposure?
Yes, of course, when the markets go down, it's a good time to be increasing. So when you see a correction, doesn't mean that this correction is over. You probably see a little bit more downside, but it's a good idea not to worry about these short-term movements. Look at the long-term growth of the Indian economy, which is continuing. And now with Trump coming in, I believe the global economy would be much better, and that will help India as well. So, and by the way, the other aspect we have to remember is the peace initiative that Trump will be starting. He will want to end the war in Ukraine. He will want to solve the Middle East situation, and he'll want to have some kind of accommodation with China. So all this will augur very well for the rest of the world, including India.
Mark, so have you increased the number of stocks which you had in your portfolio, let's say in September end versus October end? I can actually count. You had about what, 11 stocks? Have you made them 13, or have you added more to those 11 stocks?
No, they've been about the same, not in no real addition. There have adjustments here and there, but no real addition.
You do have exposure to Indian mid-cap IT. Any specific reason why you're leaning towards that sector? Because a stock like Persistent has been a long-term holding for you. A stock like CI Infosystems, again a play on maps, has been a good hold, has been an old holding for you. What makes you so bullish on these mid-cap IT companies?
Well, first of all, mid cap, if you pick them right, become big cap. So if you pick the right stocks, you will then be riding the wave as these companies get larger. And then, of course, when they become part of the index, they take on a whole new nature and more support by the market. So that's one important reason. Another is that very often this mid cap and small cap stocks are not very well noticed in the market. Not many people know about them. So in that case, you want to be sure that you're getting information which is somewhat unique and different from what other people are getting. So that's another big advantage. And of course, if you're starting with a lower price, the upside is there as well.
Mark, I distinctly remember you mentioned that you are looking at Vodafone Idea. You were not so sure, but you were considering buying into Vodafone Idea. Have you made up your mind? Is it a big yes or still a big no on Vodafone Idea?
No, we're still looking at it. We haven't made a decision on that yet.
The stock's come down from what, 19 rupees to 7-8 rupees. Why aren't you buying it? What is stopping you from buying it?
We may come down more. Let's see what's going to happen to the price.
Why do you like banks like ICICI Bank, and why is that you don't own the FI favorite, which is HDFC Bank? I mean, every FI in India loves to own HDFC Bank, but you don't own HDFC Bank, you own ICICI Bank.
Well, ICICI is much more diversified, number one. And by the way, I must say that we're not big fans of banks to begin with. It's quite unusual that we would go into banks simply because they generally tend not to be too transparent. But I think the difference with ICICI is that it's very well diversified.
Reason why you only have, let's say, 3 Nifty 50 stocks in your portfolio: ICICI Bank, Tata Steel, and Bharti Airtel. Out of the remaining, investment, you have largely mid and small cap stocks: Persistent System, Metropolis, Dreamfolks. Any reason why you only have 3 Nifty 50 stocks? Because the narrative in India, at least with fund managers, is that small cap stocks are expensive, mid cap stocks are fairly valued, and large cap stocks is where the value is. Your portfolio positioning is the other way around.
You see, you must remember that large cap does not necessarily mean low value. What we look at is not whether a company is large cap, medium cap, or small cap, although we tend to favor medium and small cap simply because the valuations tend to be better. But what we do is we look at the return on capital. We look at earnings growth. We look at the debt to equity ratios. These factors, these value factors and growth factors are the criteria we use to find stocks. Now, whether the stock is medium, small, or whatever, of course, it has to have liquidity. We want to have at least 1 to 2 million US dollars in daily liquidity. Other than that, we don't favor one or the other in terms of size. We're looking at the valuations. It just so happens that when we do our valuations, we find that these small and medium cap companies come up more.
Before we wrap up, Mark, every investor has a checklist. How they analyze a company, what are the factors they look at. How does Mark Mobius' checklist start? What are the 3-4 factors which he always looks at while analyzing a company and while making a decision to buy? What is that investment framework of yours?
Well, the main criteria, by the way, there are many things we look at, but the main criteria to begin with would be return on capital, return on assets, debt to equity, earnings growth. Those 4 factors are most critical. At the end of the day, you need liquidity, as I mentioned. So, 5th item would be the daily turnover of at least 1 or 2 million US dollars a day.
All right, Mark, really appreciate your time. So glad you could join us with your brilliant analysis. Certainly hope to see much more of you on the show and on your next visit to India.
Thank you. Bye-bye.
Back with closing trades right here on ET now, and it's getting a little rough, especially in light of where we were yesterday. So caving in a little bit, just about defending that 24,300 level for the Nifty futures. Sub that mark, or way sub that mark, I should see a 300-point fall coming in for the Nifty spot. Its trend down about 7.5%, and mind you, these are all earnings reactions. Hindalco, because of the kind of outlook that the management did talk about, that stock is nearly lower by about 9% right now. There's Tata Motors, Adani Enterprises, IndusInd Bank, ICICI Bank, a whole lot of these large caps under pressure as we speak right now. In fact, just a handful of them which are managing to sort of, wade through the waters. It's Apollo Hospitals, holding up very strongly post its earnings, a good 6.5% in the green. SBI, TCS and L&T, and TCS and L&T are only relatively outperforming because they're lying absolutely flat in trade right now. But let's welcome on board our experts and talk about which way the market is headed from here. We've got Naveen Mathur joining in right now from Anand Rathi Shares and Stock Brokers. Firstly, to talk about which way he thinks the commodity universe is actually going to go. Naveen, hi, afternoon. Good to have you on the show. Just wanted to understand, where is it that you see the currency headed? Of course, it is because of the kind of dollar strength that one has been witnessing. But do you think we will see some sort of RBI intervention anytime soon to try and arrest the fall?
Thank you very much. And thank you for calling upon me to share my views on the currency and the commodities. I think the dollar index predominantly played a critical role in the depreciation of rupee against the dollar. We did saw the dollar index over the last 2 days post the election results in the U.S. Moved to a level of around 105.3 or so. So I think that is one of the factors, because I think the Republicans and particularly the president-elect has shown the interest or the keenness while doing the campaigns, and whatever promises they have made was largely with respect to the tax cuts. And with the anticipated tax cuts in the U.S., the disposable income would improve, and therefore it might lead to inflationary tendencies. And with building up of inflationary tendencies, we feel that the Federal Reserve or the central bank would not continue to be so dovish, which we have seen earlier over the last 2 or 3 months. So I think it's kind of a neutral to a little dovish view, but at the same time, the interest rate cuts would not be to the kind of levels which we have been anticipating over the last few months. So with that, the dollar has gained strength. Plus, the policies expectations are positive for the U.S. economy. and therefore the strength in the U.S. economy is also building up the surge on the upside for the dollar index. So we continue to see the dollar index on the upside and the rupee to depreciate. The rupee did touch 84.42, the depreciative side against the dollar, and currently at now it is around 84.36, so 0.40% kind of depreciation in the last 2 days. So I think 84.50 would be the key level to watch out for in terms of rupee and the dollar levels.
450 is what you're watching out for, Naveen, but any signs of intervention by the RBI, and what about the bond markets?
The yields in the U.S. have improved. I think the RBI would kind of wait and watch. They might not immediately be taking any kind of steps. But yes, if the rupee depreciates to a level of around 84.50 or so, we might see an intervention coming in. The rupee depreciation is although good for the exports, but not good for the imports to the country, and therefore the fiscal deficit and other situations. The other macroeconomic fundamentals can worsen, which might therefore give a push to RBI for intervention and sustain the rupee not beyond 84.50 levels, although we are currently at around 84.36 or so.
Note, we let you go. Thanks so much for making time and speaking with us. But we also have our technical experts joining us on the show, Chandan Taparia as well as Soni Patnaik, with us to talk to us about the technicals. Soni, we'll start with you. The market mood has sombered quite a bit. Yesterday seemed like a completely different picture. What do we make of these one-day moves that we're getting? Clearly not able to find its direction.
Hi, good afternoon, Anisha. Thank you for having me on the show. So I think, yes, definitely, I think it could be mostly because of the expiry move today that we're getting to see some bit of a profit booking since yesterday's high move towards 24,500. Any fresh upside in Nifty would have to cross 24,550 in spot levels. Above that only we can see a move towards 24,700 to 24,800 range. So I think that's very critical for Nifty to cross above those levels. Right now, if it's even closing around 24,200, there could be sideways trend going forward, maybe for a day or two, when Nifty sustains in this particular range between 24,000 to 24,200 to 24,400 at best. I think it has to cross the resistance to see any further move. Similarly for Bank Nifty as well, I think it has to cross above 50 to 500 to see a further move towards 53,000 plus levels. Bank Nifty as of now is holding a very strong support of 51,500. So either way, it has to break in either side of the levels to see a further trend.
Okay, Chandan, what's your view on the market? Is it just the expiry related move? And then what about from tomorrow onwards? Will we resume our uptrend towards 24,500 or it's back to 24K?
So if you look at the market, it has been consolidating in a range with sustained supply near 24,500 zone from last 10 trading session. 2 to 3 times it drifted towards 24,000 and 23,850, but those levels were bought. So the follow-up is the only concern in the market. Support-based buying is visible at lower zone. So if market moves about 24,442 or 24,500, then only the bulls will be back on track. Otherwise, there are high chances to retest the recent lows, which are near 23,850 or 23,800 zone. So I'll closely watch the number of 24,442 to get any sort of recovery in the market. So meanwhile, one can play the range-bound bias in the market setup. Looking at the Bank Nifty index, here also the same sort of consolidative move. We have seen a decent recovery on last Tuesday, but again, the follow-up is missing beyond 52,500 zone. So if 52,500 is surpassed, then only the conviction will be big. Otherwise, we have to go with buy on dip with capped upside with multiple support at 51,250 marks.
Okay, Chandan, Soni, both of you, just stay with us. Lots more to talk about. For now, we're going to take a very quick commercial break and be right back.
Welcome back. Nishal Maheshwari also joining us on the show to talk to us about what's happening to the market because it's fairly volatile at this point of time and a lot of earnings which have come in through as well. Nishal, hi, good afternoon. Thanks so much for waiting by patiently. Just wanted to begin by asking you about Trent. The stock, of course, had seen a big move this year. A lot of tailwinds that were working out, but today the earnings seems to have disappointed the street. Is this an opportunity to perhaps buy into the stock or it's still very expensive?
So I think the numbers are good basically, but I think there has been, I think below the market expectation, because if you remember last year, last quarter, they grew at around 55% and this quarter they're around 40%. So I think 40% on its own is a very good number. But again, if you have such a frothy valuation 120 times, I think market is very unrelenting. And that's why we've seen this kind of a strong cut. Yeah, I do agree. Basically, I think it should be a good time to start accumulating. I wouldn't say go out and buy at one shot, but it's a good time to start accumulating because the 40% growth is still very good.
Okay, that's the take coming in on trend. Sony, what's your own sense? Do you see further pressure coming in on trend, considering this is the first big sort of breakdown that one has seen? Yes, the stock has been consistently losing about 1-2% the past couple of trading sessions, but definitely not a 7% fall.
So, definitely trend has been in a very strong uptrend for quite a while. Now that it has broken below major moving averages on technical charts, one can see it heading towards its 200 EMA support, which is towards 5,500, 5,600. So that gives it gives it enough space anywhere between 6,200 to 5,600 as a support zone, or maybe it can test those levels. So of course, I think the pain is still there. One can see it correcting towards those levels before seeing any meaningful bounce back. At least towards the 7,000 odd mark.
M&M came out with the numbers today as well. Despite that upgrade coming in the guidance, the street is a bit, muted on that one. And Tata Motors comes out with earnings tomorrow. Nishal, what's the view on autos, especially the four-wheelers?
I think the pain still continues in the system, basically. I think two-wheelers, we've seen some amount of strong rebound in the current quarter. But I think the PVs as well as CVs, we have not seen any strong rebound as yet. So there is huge amount of backlog in the system. And I think that's going to be a bigger problem. But I think Mahindra has done pretty well in this current quarter. They guided that they are going to be doing very well as far as their tractor division is concerned. And they have done well. But obviously, as I was saying, frothy valuations and everybody wants to be taking away profits from the market. So this market has now become sell on rallies rather than buying on dips. That is what I very clearly see now.
Okay, that's M&M. Tata Motors, of course, awaited. Let's address the other pocket, which is really getting a pounding today, and that's Hindalco. Not just Hindalco, but you're also seeing what's really happening with some of the banking names, for instance, too. ICICI Bank now down 2%. There's, of course, pressure on the other banking names as well. HDFC Bank, you've got an Indices, Axis, etc. as well, which are also in the red, along with, of course, Kotak. Nishal, do you think days like this could be buying opportunities for the private banking names, the large ones?
Definitely. I think banks, BFSI is a whole space per se, basically. So 2 or 3 reasons out there. One, the whole space has underperformed. And that's why I think reasonable valuation. Secondly, I think interest rate cuts. One is going to already started in US. We are expecting another 25 basis point cut today in the US. And I think sooner or later, India will also follow. So in a decreasing rate regime, banks have always outperformed. And the second thing remains to be basically in a decreasing rate regime, their margins will also go up. So I think fundamentally also it's positive for BFSI. So you should be buying BFSI across the whole sector.
BFSI, but since we are on the topic of BFSI, let me take it across to Gaurav to get a sense as to what the expectations are from SBI this time around, because the numbers are expected tomorrow. We have seen that the banking stocks and the banking majors have reported mixed set of numbers. But what about SBI, Gaurav?
India's largest bank, SBI, is all set to come up with their second quarter's numbers. And when it comes to investors, they are expecting some kind of strong set of numbers from SBI, because when it comes to loans, they are expecting the loan book to grow at around 14 to 15%, which is higher than the overall industry, and that is the reason why we may see net interest income increasing almost by 5% on a year-on-year basis. Apart from that, when we talk about net interest margins, we may see a little bit of moderations. Net interest margins may go down a little, almost by 500 basis points, and the reason being that a partial impact will be seen because of the penal interest charges, and at the same time we may see some normalization also happening. Other than that, when we talk about cost to income ratio, we are expecting to see some kind of moderation there, and that is the reason why PPOP may grow around 25% on a year-on-year basis. And lastly, when we talk about profitability, there also we may see some kind of growth of around 9%. When we talk about provisions, now analysts are not expecting any kind of negative surprise from SBI. In terms of slippages, we may see the number a little bit higher because of the exposure to MTNL and at the same time RINL. In fact, when we talk about the updates that have come from SBI, they have already downgraded MTNL's exposure of around 3,200 crore rupees to NPA substandard. So slippages is something that we will be watching out for. But overall, when it comes to asset quality, we are not expecting any kind of downgrade momentum coming up in asset quality. Lastly, when we talk about deposits growth, we may see a little bit of softness, but when it comes to CD ratio, SBI is still sitting at a healthy level, and that is the reason that might not be a constraint for loan growth going ahead. Lastly, any kind of commentary on the asset quality is going to be something that we will be watching out for, and any kind of commentary on the management when it comes to ROA is something that will be key to watch out for in SBI. But all in all, a strong set of number is what we are expecting from SBI.
Okay, that's that on SBI. And, since we are on the subject of autos, Tata Motors will be declaring its numbers. So let me take it across to Shrishti and find out what the street is penciling in for Tata Motors.
Well, this time from Tata Motors, we are expecting a decent set, but indeed the margin figure on a consolidated basis, and especially the JLR EBIT margin figure, will be the key monitorable, because all in all what we have seen is that the India business didn't perform that well, because there has been a decline in the volumes for their passenger vehicle as well as their commercial vehicle segment. When it comes to the JLR volumes, that is expected to see a low single-digit decline on a YOY basis due to the supply challenges. But the silver lining in the JLR volumes is that the contribution from some of their higher ends models is being significant. That could actually support the number for JLR division. If we talk about the JLR EBIT margin, that is expected at 8.2%, but sequentially too there will be a decline of 70 basis points if these numbers come in at as per our expectations, but that will be primarily due to the low volumes and the rising discounts. If we talk about the India business, then India commercial vehicle EBITDA margin also expected to see a decline, and 10.8% is what we are expecting, while the passenger vehicle segment, that too saw a bit of a pressure in their volume figure. Margin number expected at 5%, declining from 5.8% what the company witnessed in Q1 of FY25. But let's also take you through the consolidated number expectation. Revenue is expected at 1,05,056 crores. EBITDA is expected at 14,474 crores, while the consolidated margin figure, do watch out for 13.8% is the number what we are expecting. And lastly, on the profit figure, 5,038 crores is the number that we are expecting. But indeed, on the management commentary side, the key monitorable will be the outlook on the various segments of Tata Motors, be it JLR or the India or the commercial vehicle business. How is the company foreseeing the volume growth outlook? That will be the key to watch out for. Okay, we'll watch out for those stocks, and of course the earnings expectations come tomorrow, but just waiting by and seeing what else is happening in the market right now. Good move continues on Apollo Hospitals, Coromandel, Gujarat Gas, Chambal Fertilizers. These are some of the stock in the green, while Hindalco, Glenmark, Trent continues to be in the red. Nishal, wanted your view on the pharma stocks, because I mean, in terms of the earnings, more or less the earnings have been good or in line with expectations, but the stocks have run up slowly and steadily. If you look at the last 12 to 18-month move on these names, they're up anywhere between 60% to 100% or even more. What looks good in pharma at the moment?
So I think with Trump coming there, basically, I think there is one space, the CDMO, where in September, basically, the Senate came out with a biosecure law, and that ensures basically that more or less all kind of incremental R&D which was being done by or getting outsourced to China gets stopped. And I think Trump is a strong proponent of that, basically. And I believe basically that's a big space across the whole pharma sector. There are 4 or 5 stocks, big one out there. which are going to gain market share. So I think CDMO is one space basically within pharma, which should do well as we go along. But pharma as a whole space per se basically has been doing okay. And we continue to believe basically that incrementally also pharma should continue to do well in the coming year also.
Nishal, the other stock I want to discuss with you is Nykaa. Right now, that stock is up 7%. And I remember the conversation we were having with Nilesh on the Diwali day and the Mura trading day. And he was talking about how the entire BPC category is expected to take off. Logically, it makes sense that the women participation is increasing in the workforce. There's more disposable income. But this stock has pretty much been sideways for a long time. And people had become averse to both Nykaa's and, the Honasa consumer of the world because of increased competition. Is it time to relook at these names, or there is just that competition worry that might just keep these stocks under check?
I think competition is a big worry for both of them, basically, whether it is Honasa or Nykaa. Maybe Honasa is slightly better placed out there, given they have got given they have got products basically which are more, I think, based on natural products. So that's why they have a niche out there. But Nykaa's niche is very, very questionable, because I think they are facing competition from all the large platforms now. And Reliance has also come with a more or less a similar platform known as Tyra. So I think Nykaa has lost its uniqueness, basically. And that's why we are seeing this kind of underperformance by the stock. I don't see very strong results also coming from Nykaa. So I think it's at best avoid.
Avoid coming in for FSN e-commerce for sure. But here's Nilesh Shah as to why he's betting big on Honasa consumer and what's the rationale behind, why he prefers this stock.
There's going to be roti, kapda, makan. Maybe there's also going to be education, health. But after that, what next? It has to be the BPC, and I clearly see that markets like China have witnessed that when you go from $3,000 to $10,000 per capita, you're clearly seeing huge amount of spend go up on the BPC side. And if you get the template right, if you have the playbook right out there, I think you could have a potential wealth creator. I mean, we saw these in the 90s where a lot of FMCG companies rode on the basic staples, what we talk as the soaps and the shampoos. It's now, I think that's now a mature category. You now got to move on to the BPC side. And that's where I clearly think there's a very big, powerful mega theme which is likely to emerge in the next 5, 10, 15 years. It's important to figure out who's going to scale up and who's going to keep growing sustainability. I think that's where basically I think the opportunity is. The conventional, the Goliaths are going to struggle. They will probably grow at 2, 3, 4%. That's about it. I think versus that, if you can spot the companies which are going to grow at 20% types for the next 5, 7 years, I think there's a phenomenal opportunity because the underlying business is a very capital efficient business.
Okay, so that's about the BPC category and how it's expected to grow. But time now to take the BTSC trades from our chartists as well. Chandan, you want to go first? What's the BTSC trade?
Yes, I'll go with Coromandel. The stock has seen a positive price action even after the market weakness. On daily and weekly chart, it has given a consolidation breakout and surpasses falling supply trend line. Selective stocks from the sector are doing well, and that's why we believe this price momentum could continue. So with support of 1745, we can look for an upside target towards 1830 zone.
Right. Sony, what about your BTST trades?
So it would be a buy recommendation in Naveen Fluorine, which has crossed and sustaining above its 200 exponential moving average on daily chart. So one can buy it with a stop loss of 34.90 and a positional strong target of 3700 to 3740.
Okay, so that's the stock that you like at this point of time. Naveen Fluorine is something that one needs to watch out for, and Coromandel International. Interestingly, both are coming from that chemical space. But that's the question to you, Nishal, then. This is one space that, quarter after quarter, I've heard analysts and experts say that this quarter is going to be the worst. So there's light at the end of the tunnel. It's bottoming out, but hasn't really played out. Is it finally the time to look at some of these specialty chemicals back again?
I'm not sure actually as yet, basically, because China is the big spoiler out there, and China is once again going to be betting big basically as far as chemicals is concerned. So we have to understand basically that China is not an ROE player; they are scale players, and India on the other hand is basically ROE, more ROE focused players basically. So that's why China just sells at whatever price, and China has got huge capacities. And given that their domestic market is not doing well, they are looking for things to export. So I do not see basically a quick resolution to the chemical sector.
Right, okay, that's the take coming in on the chemical sector. But Chandan, what's your observation? Where is the Nifty Bank headed? Because, you know, we're pretty much undoing all of yesterday's gains.
So talking about Bank Nifty index, we witnessed a decent up move on Tuesday, but follow-up was missing. It failed to surpass a hurdle of 52,500 zone. But the good part is it is holding well above 50-day mark. So I believe it's likely to be in a broader range for quite some time before it start the next leg of rally. So as per the data and price pattern, I believe 51,250 to 52, 350 is going to be the broader range for Bank Nifty before it start the next leg of rally.
Okay, Chandan, Soni, great to have you guys on the show. Nishal, thanks as always for taking the time out. I'm going to quickly hand it across to Snehi as well and walk us through all the closing trades.
Absolutely. If you take a look at the trading day that we've had today, a rather somber trading day coming in. It's red all across the screen. If you take a look at Nifty though, 280 points on 280 points lower on a spot basis, but more than 300 points lower on from the day's highest point. 1.1% cut coming in on the Nifty. Sensex also in tandem, 1% cut coming in, and you have a more than 1,000-point cut coming in on the Sensex on an intraday basis as well. If you take a look at Nifty Bank, however, 0.8% lower is where that index is also. You had Nifty that was struggling to hold on to those 24,200 levels the entire day, and right now also hanging somewhere around there. Advanced decline ratio very steeply in the favor of the declines today, so that is something that did not look good for the markets today. If you take a look at some top Nifty draggers and losers today, first up on the losing end you had Hindalco, because inline set of numbers from Novelis but weak outlook. Trent was lower on a weak set of numbers, 7% lower is where that stock has ended the day. Shriram Finance, Grasim, Adani Enterprises, Tech Mahindra, all of these stocks have ended in the red. However, what did do well for the Nifty and managed to keep the Nifty afloat to some extent today was Apollo Hospitals. Good set of numbers coming in. Management outlook was also rather decent, and 6.5% higher is where that stock has ended the trading day today. SBI also very bleakly in the positive, but nonetheless helping the Nifty today, because all eyes will be on SBI's numbers tomorrow. But quickly moving on to some sectoral gainers and losers today, all the sectors barring the Nifty PSU Bank, that also very nominally, have ended in the red today. Nifty Metal is your biggest loser today, followed by Nifty Pharma, Realty, Energy, Auto, FMCG, Bank, IT and PSU Banks. These are your top losers in that pecking order today. Vedanta, Nalco, Adani Enterprises, Hindustan Copper, all of these have done pretty badly for the metal index. They've been dragging that index down. But if you take a look at some individual gainers and losers, on the back of earnings, you had Venky's that weighed on the street. Alembic Pharma, M&M, Tata Steel, Escorts, Kubota, all of these stocks very sharp negative earnings impact coming in. However, you also had a few stocks in focus on the back of that MSCI rejig, and Adani Energy was supposed to make the cut into the MSCI index but has not, and that is also one of the top losers today. But all in all, well, it's been a rather somber and a rather negative trading day for us. Nifty still under that 24,200 level, and a 1.2% cut on the Nifty is where we have shut shop for the day.